Afternoon. How are we all doing? Hello, everybody who's here. Agosa, Church, Reverend Roger. How we doing? All good? Happy Tuesday afternoon? It is Tuesday afternoon. It is Tuesday, yeah. I keep forgetting. Getting old, you know. You forget which day it is. Afternoon, Joe. Just a quick look at the news. Bear with me one sec. So I'm just adjusting stuff over here. Okay. So yeah, looking at the news from yesterday, first of all, before we have a look at what's going on with today's news. Nothing much overnight has happened. Yeah, so this is going back late afternoon yesterday, and overnight we had some musings coming out of the Bank of Japan. Market fundamentals reflect FX pricing. Basically, just kind of the upshot of what he was saying last night was everything seems to be going okay now. They've done the intervention and nothing new to report there. So not planning on changing the interest rates this week either. This morning, very little news at all. As you can see, that is this morning. Nothing much. Bit of ECB talking head, but nothing exciting. And then we move over to the news this afternoon, which is the Canadian CPI and the US retail. So we'll look at financial juice for that. As my pen. The CPI for Canada was mixed. So the core CPI, which is this one really, which is their version of the core CPI, came out as a 0.2. We were forecasting a 0. So CPI's dropped, again, making it more likely they will drop interest rates again. The trimmed and the median CPI for the year, so this is the monthly, so it's come down a lot faster monthly than they were anticipating, but year on year, it's mixed. So the trimmed CPI dropped slightly, the median CPI rose slightly. So it's a mixed message there, and faster than expected drop in the short term, which is this month on month. So in theory, that should increase the chances of the Canadian dropping interest rate again, which should, in theory, weaken Canadian a little bit more. But we were already factoring a drop in on the Canadian interest rate in October. And the market, as you can see there, basically says 48% chance of a 50 basis point cut in October, up from 45. So it's a 0.3% increase in the chances they're going to do the 0.5% cut, which is a 50-50 shot. So basically, the upshot of today's CPI hasn't really changed the outlook for October. We're still anticipating them dropping rates by something, probably 50 basis points. So today's CPI, if you look at the CAD pairs, not a lot really. We basically pushed up for a little bit, weakness in the CAD because obviously CPI figures overall were down, which is negative CAD. So everything pushed against the CAD. Then the market absorbed the information and was like, well, we kind of knew that anyway. So we didn't really go anywhere, as you can see. So the Canadian news was no news. Retail for US came out mixed again. So core retail was a 0.1, forecast 0.2. So we were forecasting a drop in core retail. We got it. It was ever so slightly worse than expected. Retail sales, we were forecasting a good 1% drop. We only got a 0.9. We were forecasting 1.2. We got a 0.9. So better than expected, but still a drop. So overall, that is all bearish for the US. So as you can see, not a lot, just a whipsaw. So no news today, basically, which is unfortunate. But I was expecting a little bit more movement on that Canadian, but we didn't really get much difference on the news. So that's today's news, and it's all done. So we're out of the way, basically, for news now. As you can see from the US markets, we've been rallying very slowly during the Globex session. We're nowhere near ADRs. the news hasn't done any big movement. So I should imagine the open will be as normal. We should hopefully get some decent volatility. So we've got 3 minutes to the open. So that's it for today's news. There's not really a lot to report today. Very little volatility off the back of that. If you look at the ADR dash today, it's flat. So nothing's hit daily ranges today at all. Nothing's hit weekly ranges yet this week because we didn't really have much movement yesterday. The RSI dashboard, the main things we've got extended are the Canadian pairs. So the CAD basically is on a back of a 3-day drop. So Aussie CAD, Euro CAD, Pound CAD, New Zealand CAD, all basically extended. So you can see, obviously, we've had this back sort of mid last week, big rally up. So far this week, nothing but weakness in the Canadian. We've hit the monthly high and a beautiful rejection out of that monthly high. So lovely looking short opportunity there. I'm already short Euro CAD and Pound CAD, so I can't take the Aussie CAD, but that's a lovely short opportunity look. So nicely extended above the 80 level on the RSI. Your hourly RSI also extended and embedded for 2 days. Good rejection. So limit orders triggered at the monthly, which we know they usually do. Whether or not that holds, we'll have to wait and see. But you're off the back of a 4-day rally with lovely propulsion targets to the downside. So good looking short opportunity Aussie CAD. In the next half an hour at the open, we'll probably get a reversal alert on that. On the hourly, you haven't had one on the 15 yet because of the whipsaw off the news. So yeah, just about to reverse by the looks of things. So good looking opportunities on those today. But apart from that, nothing much else to report. The yen is stalled out down here for the last sort of week and a bit. So today I'm in the Aussie yen long, which is why I'm looking at the Aussie yen. We did push up a little bit, pulled back down again. We're pushing again. So if we can break that high, we're going into the previous day's high, and then we've got the weekly high coming up, and that's all within ADR. ADR is up there, which is where my target is today. So if we can get some weakness on the yen at the open, I'll be out of that Aussie yen, but all the yen pairs the same. We're just stalled out down here at the moment, not going anywhere. Again. Afternoon, everybody else. David, hello to the great one. Hello, great David, the great. Afternoon, AZ, Lumo, Neo. So we'll see what happens at the open. Whoops, wrong terminal. I want this terminal. So we'll see what happens at the open today. Big whipsaw just coming on the Dow pre-market. So market is opening now. What's going on with my terminals? Why is everything saying zeros? What's going on? Why is everything saying zeros? Okay. What's going on there? Why has it suddenly decided not to do anything today? Weird. It seems to have some kind of MT4 malfunction. I was recording a video this morning and I've been playing around with stuff. I've probably broken something, although I'm not quite sure what. Anyway, I'll manually measure. Your pre-market range on the NASDAQ is too small, so there wouldn't be a pre-market trade on that one today. Your pre-market range on the Dow, 47 to 50. So again, no trade on either of these. So minimum range is 417 on the NASDAQ. That's too small. And 61, that's only 50. So there would not be any pre-markets today. It would only be opening range breaks. And the open is absolutely dire, look. We're not even going anywhere. It is 130, 230. Oh, it's not. It's 426. What am I talking about? I'm early. That's why it's not worked. I'm 5 minutes early. Why did nobody tell me? Sorry, my brain's a bit fried today. I assumed that was the time. Why was I looking at... I was looking at a different timer, obviously. scratch that. We're and there's my other terminal. See, I've been mucking about with stuff today doing this video, and it's completely thrown me out. Let me just shut that down. So yeah, so 5 minutes to the open. I thought that was the countdown. It's not. We've got 3 minutes. Afternoon, Meh. No, you're the great one. No, you're the great one. We can argue about the great. That's a really good show, by the way, The Great. Get a chance to watch that. So we've got some volatility coming in pre-market at the moment. So let me just go back and look at FX and finish that off while we're waiting. So the ADRs today, we've gone through RSIs, Aussie dollar CAD, great opportunity for a short there. So we were 1, 2, 3, kind of, that's not really an update, but it's kind of a 3 to 4 day rally. We're off the back of there. Aussie US is also extended on the 4 hour. So US weakness along with the Canadian. So not quite up above the 80 level, which is where I like it, but nice big rally. You've got Euro CAD already short on that, second position on that one yesterday. We just sat around after that pullback. So 2 positions on that. Target is sort of in this accumulation for me at the moment, but obviously could come all the way back down there again. We'll wait and see what they do with the CAD this afternoon. Euro US extended on the 4 hour. That's already rolled over. You'd have missed that. Reverse alert's already gone in on that one and the retest. Your pound CAD, which again I'm already in, second entry taken on that one yesterday, very much the same as the euro. Lovely big move, accumulation day, massive push, so looking for a pullback back into that accumulation. And pound US and New Zealand dollar CAD, pound US and New Zealand dollar CAD just extended, not quite got a signal on that, very close but not quite. I was hoping we're going to get a tap on this weekly high today. We could still do, or that monthly. Good looking short up there. But even so, that is good looking short opportunity anyway. We've had a reversal alert on that, just triggered, and it's pushing down. And the same with the New Zealand CAD. You're just about to get a reverse alert on that. Bit of a weird whipsaw on that one, but so you're just about to get a reversal on that one. Decent looking level on that. So that is your 2 week high. So we push down, back up, and then that is your weekly low, weekly high. So that's the 2 week high triggering, and then you've got a monthly high, which is around about 125 ADR, and it's been pushing quite hard. Okay, markets open. For real this time. Okay, so opening range, pre-market range size too small, 58 should be 61, 357, 417. So there's no pre-market ranges to take today because not enough movement pre-market. So I'll be taking the 5 minute ORBs today. Bit of a push down on the Dow. Canadian dollars rallying at the open. Probably better to look at euro. So a little bit of strength coming through in the CAD. Not much actually, a little bit. And pound US dollar. So a little bit of US dollar strength coming through as well. Tra-la-la, if I want to use the position trader EA and only trade 1 pair at a time, when the position opens, I have to fastly uncheck allow live trading on the other 27 pairs. If you want to just trade 1 pair at a time, yeah. However, you wouldn't set it up on all 28 pairs if you just wanted to trade 1 pair. You'd just pick a pair. No, there's no other way. I mean, if you just trade 1 pair, you just trade 1 pair. But yeah, just turn off auto trading basically. Or more likely, you would take a manual. If you're what you're talking about, you would probably take a manual position. So if you're trading with a position trader EA, you would wait for a setup, and then you would take a trade, and then let the EA manage the trade on your VPS. Same way, exactly what I do, basically. Afternoon, Peter. David, I'm long on 4 CAD pairs. Yes, you are overexposed. You're long 4 CAD pairs. So you're long against the CAD. Could go either way, the CAD today. Very difficult to tell which way the CAD is going to go today because that news was very, very mixed. Weakness in the yen at the open. But I mean, if you look at the pound CAD, you know, we really haven't gone anywhere at all today. We've had the whipsaw on the news, but that news is not directional on the CAD. So, but if you've got 4 pairs on, you are overexposed. It depends on how you're trading, though. I mean, it's all to do with risk. If you're using 0.25% risk over an ADR and you've got 4 trades on 4 CAD pairs, that's not really overexposed. But if you have got 0.5% risk over half an ADR or 1 ADR, you've got 4 on. Basically, all you've got to think about is if the CAD now rallies like crazy, you're fine. If the CAD drops, you're stuffed, but you're stuffed 4 times. So this is what exposure is all about. It's about making sure that you haven't got too much risk on an individual currency. Because if that currency rallies like crazy, this is what the dashboard's all for. So I'm long twice on the CAD because I've got Euro CAD short and Pound CAD short. That basically says I shouldn't be taking any more CAD pairs because I've got exposure on the CAD. If I take another CAD short, if I go sort of short US CAD, again, I'm going long the Canadian dollar. Just limit your exposure. Otherwise, you're just getting stuck. Nothing closed out yesterday. Bit of a dire week this week, so mind you, it's only Tuesday. It's early doors. So the reason I keep looking over here is I've got a Pound CAD short on my other account as well, but I'm scalping with quite high risk. So I'm keeping quite a close eye on that one today. Wow, Dow, huge whipsaw at the open on the Dow. So we got 11-point whip at the open. So there we go. We'll be taking a trade of that opening range. So break long or short of the opening range. Decent range on the S&P if you're trading the S&P, so you'll get a 5-minute ORB break on that one, and the Nasdaq the same. Decent range, so we'll be taking a break of both of those today. We'll see where we go. DAX is coming down as well. So indices weak at the open. All good. I have the EA set up on H4 80-20 levels. RSI 10 risking 0.5% over 1 ADR. Yes, I mean 0.5% over 1 ADR isn't hideous, but I would rather just have 2 exposures on that. Ideally. But it depends on your risk tolerance. You know, everybody's different. Some people will be happy to have 0.5% risk over 1 ADR on multiple pairs. Some people, that's enough. It's totally down to you and your tolerance for drawdown. You know, some people will sit there in 20% of drawdown, 30% of drawdown quite happily. Some people will panic when they get to 10% of drawdown. If you're that type of person, then taking 4 exposures at 0.5% is going to get you there very quick. So it's entirely down to you. But you can always up your risk. Yeah, this is kind of, I think I cover this in the bootcamp. You can always up your risk at any point. If you start with a 0.3 or a 0.03 per $1,000 in your account or $2,000 in your account or whatever you start with as an entry level, and it's tiny, you've got very little risk, you've got very little worry if anything goes against you. You can always up that as you get more confident. If you go in with 1% over 1 ADR and you get exposed on 4 currencies, you can't drop that risk down. If it goes against you, it's going to hurt. So you have to just start small. That's why I recommend in the bootcamp 0.01 per $1,000 in the account. Ideally start with a 3 to 5k account and then get used to position trading and then scale up as you get more confident. But you've got to get through all of the crap, basically. You've got to experience problems to know how to get out of problems. There's nothing that I can teach you theory until the cows come home. You can do the bootcamp 10 times, absorb it and know it off by heart. But the first time you get 6 positions on and you're in 3.5%, 4% drawdown on one instrument, that's what teaches you what you do wrong. It's always good to have rules, but I did 0.5% per ADR because I'm only trading 12 pairs. That's fine. But if you're only trading 12 pairs, you are still, it's nothing to do with the number of pairs you trade. It's to do with your exposure on an individual currency. If you're trading 12 pairs, but 4 of them are CAD exposures, and the CAD goes on a run for a month, you're hurting a lot. If you're trading 12 pairs and only 2 of them are CAD, it's going to hurt half as much. And also bear in mind the US and the CAD tend to go together. So let's say, for example, you've got 4 CAD exposures on, and then all of a sudden you take 3 US exposures and everything starts to go downhill in US and Canada. That's 7 exposures, which are all going to go the same way at the same time. Not always the case, but often. Come on, pound CAD, let's just break that low. Nice. So short on the NASDAQ. If you're trading S&P, you probably have triggered short S&P as well. The Dow, inside bar, we've got 20 seconds left, 25 seconds left on this candle. So we're forming an inside bar on the Dow. So indecision, no directional bias so far. DAX is coming down quite nicely at the open. So there's weakness in the European markets. No direction yet in the US. It is bearish though. So we've had a push up and finished bearish. We haven't even broken the high of that candle, but we haven't managed to break the lows. We're inside bar, bearish there. And again, bearish. So bears are in control at the moment at the open. Initial cash balance seems short. We'll see where we go. How to avoid overexposure if the EA is set up to get me into your entries. Monitor. That's all I can say. So monitor what you're trading. It depends. There's no real way of, you can limit exposure. You can have an EA, you can get an EA built that monitors exposure. And it's very difficult to do because the way that different brokers represent different pairs with prefixes, suffixes, the way they set accounts up. So some of them will have a core of FX crosses which are non-tradable, then you have FX crosses which are tradable. It's quite complex to set an EA up to monitor exposure. So it can be done. There's probably a way of doing it. I've looked into it before and it works on some brokers and some brokers it didn't seem to work on. So but at the end of the day, there's 2 ways of managing your exposure. One, if you set up the EA on your VPS to trade all pairs, you monitor your dash. And when you see 2 trades going on the Euro CAD, you just quickly flip over to your VPS, find all your CAD pairs and turn auto trading off. You can't take any more CAD. Yeah. don't forget the market moves during the day. So your exposure, when you come to look at it, let's say, for example, this has just taken trades 2 hours ago, you're not going to be in a lot of drawdowns. So if it's taken too many, just shut one out and take a 0.2 loss on it or a 0.1 loss on it, and then turn the EA off on it. Or do as I'm doing, which is at the moment, I'm using the EA to manage all my positions, but I'm taking the trades myself. So I'm short Euro CAD, I'm short Pound CAD. Those trades were both taken using the button. The EA is managing those for me. There's an opportunity on the Aussie CAD, but it's not getting in automatically, and I'm not taking that trade because I have my CAD exposure already. As much as that looks like the best trade on the planet right now, yeah, 3 days solid up, 2 ADR days, pretty much back to back, extended up to a monthly high with a huge rejection candle and propulsion gap targets to the downside. As much as I want to hit the button on it, I'm not. But if you've got your EA set up at 70-30, it will be hitting the button. It's entirely up to you how you manage risk, or you trade everything and you reduce your risk down. So again, you can trade all 28 pairs, but drop your risk. Yep. So if you're trading 0.5 over 1 ADR as a risk, trade everything, but drop your risk down to 0.25. Because if you're going to get exposed 4 times, halve your risk. There's no right or wrong. You know, there's. I could probably build an EA that says that monitors your account, and if you have, if it takes a trade with extra exposure, you say close that trade, but it's still going to cost you a commission and it's still going to cost you the spread. You'll just take a little bit of a tiny hit on it, but it will close that out for you, so it just keeps on top of your exposure. But people want to have all of the exposure on. Yeah. So, you know, what I've just explained to you about dropping the risk and trading everything, there's nothing wrong with that. A lot of people are doing that. They're trading all 28 pairs. They're trading with small risk. They're like the guy in Discord who keeps publishing his result, Howard, I think it is. He's trading everything, every pair, with tiny, tiny risk. He's taking 0.1 on every single trade. But he's trading everything. So he's not following exposure rules or advice. He's just trading the lot. So for him, he doesn't want to have that facility. He wants to trade everything. There's no right or wrong. It's all about managing risk. How you do it is up to you. But at the end of the day, you're the trader. If you're using any EAs, you should be monitoring this constantly. Every time there's a news event, you should be watching this. Every morning, you should check this. Every evening before you go to bed, check this. You check this 2-3 times a day, at least. It's your job. But I might look into ways of limiting it, because I know some people want to do it. But it's not easy, unfortunately. The way that MT4 and MT5 work, and the way that brokers represent currency differently. And again, if you were to be, you know, I can use a base currency and a cross currency. What about the DAX? It doesn't have a base and a cross. So you've got to write all the extra logic for indices, people trading crypto. You know, it's like from a programmer's perspective, it's not just Forex pairs. If I did that sort of thing, people would be going, it doesn't work on crypto. No, give me a list of the 25,000 cryptocurrencies out there and tell me which of them are correlated, and I'll try and build you something. But it's going to take me a year. It's just not worth the hassle, really, of doing it, in my opinion. But you just got to be managing risk, basically. That's your job. It's the only bit you've got, isn't it? We can't control the market direction. We can't control the market timing. The only thing we have control over is risk. It's our only job, controlling risk. Look at my Aussie yen. Yeah, I'm in this in 0.63 drawdown. I've been in this since back here. I can't do anything about the direction because the market's going sideways. I don't know when it's going to go up and I don't know when it's going to go down. That's not in my control, but I can control the fact that I don't take any more yen trades. That's me. If it pushes up today, then I might consider another one. But anyway, if Okay, we're inside bar on the CAD. I'd like this to break down in the next 12 minutes. So Dow has just put another inside bar on the opening range. We're not going anywhere today at the moment. Stuck. Peter, I have learnt this the hard way. After a few successful trades on market reversal, I thought, okay, this is how I will be rich quick. Set all strategies and went into the summer squeezes with and in a couple of days, 30% drawdown. Yeah. Couldn't sleep, eat. My stomach was upside down. Be careful and start with small risk and learn. You can always put the risk up, but never put it down if you lose your money. Yeah. I've started last year, 2023. Oh, you started last March. Yeah. Market can stay irrational longer than you can stay solvent. Exactly. And if you have no capital, you can't be in the game. Yeah. My old mentor, I would say old, he is old now, but one of the things he used to drum into us all the time was your number one job is capital preservation. Because if you don't follow the capital preservation rule as number one, it doesn't matter how many other rules you've got. If you haven't got any capital, you're not in the game. Simple as that. If you make a little bit of money and wish you'd made more, that's great. If you take high risk, it's like there's a saying that goes around trading as well. You're better off wishing you were in the market than being in the market wishing you were out. Yeah. So basically, I've taken too much risk. It's going the wrong way. I wish I hadn't traded. Yeah. Start small. Get used to it. It's all about experience, this job. It's all about getting kicked over and over and over again. And every time you get kicked, you remember why you got kicked. And every time you get kicked twice, you never get kicked a third time. As soon as you've been kicked by everything the market can throw at you, you won't get kicked again. There's no amount of people can read a book at you and tell you that's a bad idea, because you will go, yes, it could be. But when it happens to you, you'll go, I see what you mean. But it's not until it happens to you and you get the I see what you mean, you actually go, I won't do that again. The market will kick you. Doesn't matter how many times you get kicked, the market will kick you again and again and again until you learn not to do it again and again and again. Nice breakdown on the NASDAQ. Some volume coming in. This is the hourly candle close. No, it's not. Sorry, it's 250. I've got a real problem with time today, haven't I? I was starting trading 5 minutes early, and now I'm trying to close the candle 10 minutes early. Just looked like an end of hour candle, that move, because you usually get a pop at the end of the hour. So NASDAQ, we are breaking down. So far, probably that high there is your first downside target, where we might find some resistance and support, but not really much follow through on that, is there? Some strength coming through the Canadian, probably coming through on the US as well. Yeah, so we've got some US dollar strength coming through at the moment, which is driving these indices down. Not very strong though. Got a nice 3-bar reversal going in across all indices at the moment. So they're all doing the same thing. So again, push, pause, pull on the Dow. S&P the same. So market trying to turn tail and run today. Struggling though. We're still inside bar on the Dow, so there's absolutely no follow through at the minute. Has anybody got any FX pairs they want to look at specifically today? Some good yen strength coming through. Sorry, yeah, yen weakness coming through. So watching this level on the yen at the minute on the Aussie, which is basically my break even, happens to be exactly at resistance to the upside today. So what I'm planning to do when we get to resistance is to close that position out in case we bounce again, and then I'll do DD control using that, which will be roughly 1,000 by the time we get there. So I'll close out 50% of that position to bring the drawdown down and bring the lot sizes down, and hope that we get a continuation push back up into this area here. But just worried about this resistance. We've hit this 4 times now. Sort of 5, basically. It's that previous support. Slammed through it. Propulsion. We added. Likely we're going to find orders there. Unless it slams through it. Obviously, if it slams straight through, it's not a problem. But we're likely to find upside resistance there. Pound CAD is just attempting the lows of the news. So that was the gap down at the Canadian CPI. So we've completely undone the CAD move. A-shaped recovery gone in there straight away. So next stop on the way down is going to be today's low, which is this propulsion move that took us up at the end of yesterday. If we can get through it. Which we have just done. So broken that low. So watching this low, basically, which is low of the day. See if we can get down there. Daily break even Aussie yen. It's amazing what difference the carry makes. Being long on this and getting carry long. That is actually going to be break even because I've got long carries on it, which is cutting my commissions down. It's amazing. I love it. Hate longing it, but love it. I'm in profit on Aussie, New Zealand and Euro odd, but I'm holding out for more Aussie strength. Aussie, New Zealand. Yep, so we've broken the weekly highs. Bit tricky to find an obvious support and resistance in there. There's lots of it. That area, that area, that area, that area, that area is your main area of resistance. So that 200 ADR would be my ultimate upside target on that. But you've got a couple of areas on the way, but nothing before ADR. Actually, yeah, no, sorry, you got that weekly level. Right, exactly where we are now is that 3-week high. Exactly where we are now is the 3-week high. Aussie New Zealand. Euro, what did you say? Euro odd. Yeah, I mean, Euro odd is fundamentally short. We need to break that support, which is here. So once we break that support, you're going to flush back down into the monthly lows, 225 ADR. But it's, as you can see, it's finding it tough to get through that level at the minute. But it looks to me like you may well, pound CAD is testing lower day. You may well get that today. So this is the low of the day. So you can see the previous limit order triggers off that weekly level. That's the weekly level triggers today. They're not holding up. Propulsion is holding. Sellers are in charge. So if we break that level today, you've got a good chance of getting an ADR flush today. There's nothing once we get through this level really to stop you until you get back down to here, which is 125 ADR. So got to break it yet. Good move, pound CAD. Dow's flushing. So short Dow. Nasdaq's stopped. So we've got a lot of unwinding to do on this Dow. Look, same with the S&P really. Nasdaq's kind of already done a profit take move, so there's less reason for it to flush today, but that's coming down nicely. Just going to shut that pound CAD out. Last thing, market will be here anytime you're ready. Don't rush. Yeah. Exactly. That's one of the biggest problems I had when I was actually just the biggest problems I've had for most of my trading time is patience. Right. Suspected spam, that would be the broker. Yeah, patience, basically waiting for a setup. Yeah, you know, this is, I keep saying, I've been saying for the last week or so, I haven't got any exposure on. The reason I haven't got any exposure on, nothing's set up. I'm not taking trades just because I haven't got any trades on. Very hard thing to overcome because the whole premise of making money is having risk in the market. If you haven't got risk in the market, it's physically impossible to make money. So you feel like if you're flat, you've got to get some trades on. And it's not the case at all. Getting trades on because you're getting trades on is just going to enter more randomness into your trading. So it's all about waiting for the setups. If stuff is not extended, like that Aussie CAD, perfect short. But you know, we haven't really had many setups this week. That's probably the best of the week so far. And it is only Tuesday, but you know, it's just waiting for the setups. Sitting on your hands again. There's 3 positions again. People, this is all this stuff that gets drummed into your head. Hopefully, I'm drumming it into your heads, yeah, because it's been drummed into mine for years. There's 3 positions in the market. You can be long, you can be short, and you can be flat. That is a position. What's your position at the moment on the Aussie dollar CAD? Flat. Nothing wrong with that. I'm not getting in because I'm flat. I'm waiting for it to set up so I can get in short or long. You know, don't think you've got to be in a trade. Wait for a setup. Those A triple plus setups that come, you know, the 200 ADR days where it just goes parabolic to 200 ADR. Those are the days that are going to make you the money, and they're going to be the quick, easy trades. You only need a few trades a month to work out to make 10% a month. But There's no point in just taking trades for taking trades' sake. But again, like I was saying earlier, these things you learn. You go, oh, I'm just going to get in because that looks the best so far today and I haven't taken a trade for 2 days. That one that goes against you because it's not extended, it hasn't hit ADR, and you're getting into it because it's a mediocre resistance level that it's kind of respected in the past 3 years ago. That's the one that's going to go against you for 4 weeks, and you're going to go, why did I take that? You can't look at your chart and go and look at any trade in the past, like that one there, and go, why did I take it? You shouldn't be taking it. Yeah, if you've got a system or a strategy, that short there is because of that. That long there is because of that. There's no other trades on that chart because there are no other setups on that chart. So that's it. You just take what you set up with your strategy and that's it. If you trade 90-10 levels, you trade 90-10 levels. If something gets to 87 on RSI, it's not a trade, is it? If you've back tested 90-10 and that's where your strategy lies, those are the trades that you take. Pound CAD is stuck. The only reason I keep going on about this is because I've got a trade on it. Pound CAD's currently stuck at lower day. Nice reversal alert there. Rejection off the CAD news. So beautiful flush down into this propulsion gap on the cards. So confluence, 50% retracement, previous accumulation, propulsion move. Good target. NASDAQ back up inside the opening range. Still got high, low, lower high, lower low. So we're looking to put in lower high here. There's no propulsion moves today though, really. So a lot of volume just came in. S&P's pushing back up again. Everything's pushing back up. I was thinking it would be useful an exit target, close all trades at specific percent on the position trader EA. I feel like I need it because sometimes it tries aggressive drawdown control until a margin call. Well, then you would need to close that out. Yeah, I could build that in, yeah, but again, you can do that with the market reversal alert CA if you want. Test it with that. That's got that functionality in, but no one ever used it. This is the thing, you can build an EA to test everything. The problem is, the more setting, I've got an EA I've been building, which is it is a kind of like a Swiss Army knife, if you like. So I can do absolutely anything with this EA. Yeah, and you see how many inputs it's got. It's absolutely vast. I can basically, and this is part of what I was building for my friend, so they could test all of his strategies. You can do virtually anything with that, fully automated. The manual will be about the size of the Oxford Dictionary because there are so many combinations. There are trillions of combinations of settings. If you put a tick in every box in the optimizer, so if you ran an optimization on this with a tick in every box down here, your MT4 wouldn't finish before you're dead. It's that complex. The more I add into it, the more you try and replicate a human being, the more complicated something gets, the more impossible it is to use, unfortunately. So, you know, same thing applies. You're the trader. If you're finding in the back test it takes aggressive drawdown control over and over and over and again until it blows the account or gets a margin call. That point in time is when you would have turned around as a trader and gone, holy crap, I'm in 12% drawdown on this. I got to shut it. That's what you would have done. So if you see in your back test, it does that and that. Somewhere on that drop in the back test, you as a trader would have gone, got to get out. So it doesn't matter, does it? You would have got out in that position. And if you didn't, you would have blown your account. Being able to set a close at 7 to 10% would simulate what we do when monitoring the EA. Yeah. But my argument is why? Why do you need that? The fact that it's given you a margin call or blown the account in the back tester means that you would have stepped in and done that. So whether I put that in or not, all it's going to do is go, I would have got out with 7 or 10% in that case. Yeah. So wherever that test stopped, you go, I would have got out with 7 or 10% loss there. Has it been more than 7 or 10% gain? If so, I would have still been in profit. Restart the test from the next day and then carry on. That way you can simulate it. If it doesn't ever get to that point, you know you're safe. That's basically all you can do. Why do I keep pressing that button? I don't know what any of these are. I'll just load that one up. I don't know what it's doing. Excuse me. But yeah, just run the test. When you're ready. This is obviously an old set file that's not really set up to do anything. But I was going to say, imagine the P&L going like that. You just step in. If I programmed it to automatically get you out there, all that would happen is it would continue and do that. Which I kind of get the point of, but why is that not trading? Oh, that's 90-10. That one isn't going to run into drawdown because it's the super high reliable strategy. Okay, Dow's back up at higher day. Well, retesting the pre-market highs anyway. So Dow Jones today, if that breaks, we're out at all-time highs. So we're testing. So yesterday was all-time highs. We're testing again all-time highs. So part of this parabolic move to the upside at the minute. So if it breaks high today, ADR would be target for the hedge. Pretty much the same with the NASDAQ. We're not quite anywhere. Well, we're not at all-time highs, but 125 ADR is your previous monthly high on the NAS. Looks like it's going to hedge today. What a mess. Didn't take any trades. 4 hour 90-10. Oh, that's a 28 RSI. That's why. This was part of a test that I was running to see what RSI levels historically have given what levels of trade entry. That was the RSI 28 test, and it didn't give any. So of all the set files I could have picked, I picked the one that didn't trade. So yeah, this is going to be a good trade, good one as well. So this is RSI 10, 90, 10. Euro Yen ADR. Okay, so Euro Yen's broken out of those highs. There you go. So that only took 18 trades. 5% gain. So Aussie Yen also out above those highs. So we have broken those highs. So watch this propulsion gap here. So quite often 50% of the propulsion gap will act as a resistance as sellers try to add more into that short. But we've had 4 shorts there, so I suspect we've just out of sellers. So that'll be an exit today. So back into profit on that one. If you want to hold it, if you are in it, obviously 50% retracement is that propulsion move, but I wouldn't go that far. So I'm just going to close out that bottom one and close out. I'm going to close out, I won't close out half, I'll close out 0.4. So a bit of DD control. So average is basically ADR today. Bank to 0.82. So got a trade in profit. We'll see how far we can get today. So I'm just going to move the targets up. Top of that propulsion gap, just try and bank a little bit more. If we can get a push to 125 ADR today, which would be the propulsion gap fill, which is also going to be that resistance where we broke. So once we get the propulsion gap filled with 125 ADR, we'll be exhausted. But that's your only ADR hit so far today, Euro Yen. So again, Euro Yen, if we can push up further today, you could take a short, assuming that we're going to do that. So nice quick ADR reversal. M5, wait for reversal. Hedged on the Dow. Oh my God, look at that. Literally, the higher that candle's hedged me. See where we go. Still short only on NASDAQ though, so if we can drop on the NAS, get that to pay for the hedge, that would be ideal this afternoon. My thought was that someone trying the EA for the first time, it gives more confidence in it if the account is blown. Well, yeah. But if someone's trying it and it blows the account, the whole purpose of my products is to position trade. If you haven't done the position trading bootcamp and you just put it in your account, you're not going to understand what it's doing. So many people contact me and go, why does this not use a stop loss? Go and watch the bootcamp. I can't be bothered. Go away then. Not interested. So I haven't got time. If you haven't got time to put into your education, I haven't got time to put into explaining the whole thing. I've put together a 15-hour lesson. But yeah. But if it blows the account, it's a good thing. Somebody said to me the other day about a test that they were running with the Position Trader EA. And I can't remember what the test was, but the equity curve was really good until a point where it wasn't. Let me just try that one. I think that is more aggressive. The equity curve was really good until it wasn't. And they said, so I'm going to run that set file because most of the time it was really good, apart from that time where it took 40% or 50% or some ridiculous amount of drawdown. And my answer was, so what you're going to do, ignore that and pretend it didn't happen? It happened, yeah? If you run a test and it blows the account, it blows the account. It's not good. Don't do it. Don't use it, yeah? If it runs, you run the test and it blows the account, you know why it's blown the account and you know what you would have done in that situation, use it. That was my answer to him, basically, was you can't ignore the 50% drawdown, but what would you have done to stop that 50% drawdown? Well, I wouldn't have let it get above 10. Fine. Then take 10% off the net profit at the end of the test. That's your result. Yeah. So, you know, you've got to, like that there, there's a big drawdown in the middle of that result. There. Yeah. So you went into a big drawdown with 1, 2, 3, 4, 5, 6, 7, 8, 9 positions on. Yeah. So there's many ways you can minimize that drawdown control. You can use drawdown control per position. You can use drawdown control as a percentage reduced on each position. There's all sorts of things you can do, but you can't ignore it. It happened. Yeah. The 23rd of May 2022, this thing got squeezed. So yeah, I can understand the having it close everything at a loss, but again, it's just adding more functionality. And the thing is, people won't, and again, you know, this is my argument with this position trader EA, and this is what I do not want to do with this that I did with the market reverse alerts EA. Every time I add another input in there, it's more complication. Trying to make it easy for somebody to use that doesn't know what they're doing with it is impossible if you enter more things in there. If I put in there close out at 10% automatically, someone's going to run this and go, why did it take that 10% loss? I'm still going to have to answer the question again and send them back to the bootcamp. You know what I mean? It's just adding more functionality for adding functionality's sake. Can't keep putting lots of new stuff in it. Bootcamp is king. It certainly is. Well, in my opinion, it is anyway. I'm biased. Dow, Hedge, we've broken out all-time highs again. So we're all-time highs on the Dow. So upside on it. Let your finger, stick it in the air. At some point, it's going to stop today. But there is literally no upside resistance anywhere for that to meet. So whenever the buyers run out of steam at some point. So 5R for me at the moment is 125 ADR. And that's where I'm going to leave it. You can't muck about with all-time highs. It's a guess, complete guess. There is absolutely no way of predicting where this will go today. It will run out at some point. So we're all-time highs again, the same as we were yesterday. But look how quickly the all-time highs ran out yesterday. We put in an all-time high. They completely undid it. So this could just completely collapse. NASDAQ is trying to anyway. Champagne afternoon. I'd like to thank you for the reversal alert, CA. I trade gold with the EA and it works perfectly. Good. Somebody else trades gold, but they won't tell me how they do it. If you run tests on gold, though, I haven't got gold in here, but if you run tests on gold, it doesn't perform well. I suppose it depends what settings you use, isn't it? But personally, I've never got on with it. That stuff is all good for back testing, not really useful in real life. No. This is the thing, and this is AZ's point is good in the fact that let's say, for example, we put a setting in the position trader EA that said get out of all trades at X%. So today is a great example. You're in pound CAD, right? You're sitting there at 6.5% drawdown. The Canadian CPI comes out at that point. Yeah. The news spikes to 7.2. It closes out a 7.2% loss on your account. And then, as they do with news, very often, it undoes it. Yeah. So what's the next thing? Well, you put a news filter in. Okay, so now we're putting in a filter just in case that happens. Now we're putting in a filter to counteract that happening if that doesn't happen. What you're ending up with is 1,000 if statements in your EA, which are all just in cases. You're the just in case. Yeah. If you don't want it to close out today at 7% because you're thinking it might be a whipsaw news, the EA isn't going to pay any attention to that. You're just going to take a 7% loss and then it's going to pull back down to 5%. But then you'll be going, oh, I wish I'd have set it to 7.5. And then you'll set it to 7.5 for next time. The next time it happens, it'll be at 7%. And then the news will come out and it will take it to 8% and it will drop it to 3%. And then it will drop down and go to a 3% profit. But you won't experience that because you had a setting in the EA that just got you out because a number was hit. But your brain was like, holy crap, look at that weekly resistance. That weekly resistance just behind it, followed by that monthly resistance. And that's an all-time high from 2016. We're just about to hit that before the news. That will close you out with a loss. Your brain will be going, that's going to be a resistance. You can't teach the EA to do that. You've got to be in control of it as a trader. You've got to be the trader. You cannot fully automate everything. You can build as much testing into an EA as you like. But at the end of the day, you're pressing the buttons and you're monitoring the P&L. It's a business. So you've got, I have tested all of this. That EA that I've just shown you, this Swiss Army knife EA kind of thing. Yeah. I'll show you some of the inputs in it. Yeah. So there's multiple strategies that can be traded with it, but you can set it to work on bar or on tick. You can set it to take one trade a day or as many as you like. You can set it as only one trade maximum or 99 trades maximum. You can limit the time of day that it opens trades. You can use a moving average for trend. You can exit at a set time every day. You can also exit at a set time every day only if in profit or regardless of the result. You can exit at a specific candle close. So you can say, if I'm in profit at 4-hour candle close, get me out of the trade. You can use a moving average trailing stop. You can use an ADR trailing stop. You can trail to break even only, or you can continue to trail if you want to. You can exit at a percentage of your account balance in profit. You can exit at a monetary account in profit. You can exit after a set period of candles have closed or a set amount of time has passed. You can exit positions when a specific target is reached, but only a partial exit, and keep exiting every time you hit a target as a partial and then trail with it. You can add extra lot size if there's new signals. You can delete the TPs and the stop losses if you want to, or you can leave them in place. You can risk percentage trade, lot size, or account of money, and so on, and so on, and so on, and so on. Yeah, this thing, there isn't anything that does not do that any human being on the planet that trades can do. So I can test anything you can throw at me, basically, with that EA. I've tested it all. And you know what it told me? There's a load of ways to make money and there's a load of ways to lose money. But at the end of the day, I have no idea which one to use because I can't see into the future. I can backtest everything to the nth degree. But tomorrow's candlesticks are never, ever, ever going to happen again. Yeah. Is it going to do an all-time high today and hold, or is it going to do what it did yesterday and completely reverse the all-time high? Are we going to put in a double top all-time high and then drop by 3 ADR for the rest of this week? I don't know. I could test it. Still not going to tell me what's going to happen today, does it? Doesn't help you. But if I give somebody that EA right now and say, go and backtest something, you'll be there for years. You'll never come up with a strategy. You'll come up with a million strategies that work. Yeah. I've got built into this an RSI strategy, a moving average strategy, an impulse strategy, an inner row strategy, a propulsion gap strategy, and a price action strategy. Yeah, it knows price action candlesticks. It knows all the price action candlestick patterns. It knows everything. I can test whether it's better to get in on a shooting star or a hammer. I can test whether it's better to get in on a bearish engulfing. I can test whether it's better to get in when the wick is 10%, 20%, 30%, 40%, 50%. I can test whether it's got to be a 3-bar pattern, a 2-bar pattern, a multi-day pattern. I can test yesterday's high-low breaks, weekly high-low breaks, monthly high-low breaks. I've tested it all. Sometimes it works, sometimes it doesn't. On roughly 50% of the time, it will be profitable. It doesn't help. None of it helps. It's all good to know. I know it's better not to use a moving average trailing stop. That never works. That's always less profitable than everything. In fact, everything. If I build a strategy and test it and put any type of trailing stop on it, the overall P&L collapses. I've used parabolic SAR, ADR. I can also, with that, I can reduce the size of the trailing stop depending on the percentage in profit. So as you get more profitable, it reduces the trailing stop to make you more money. It doesn't work. None of it works. That EA I've built from all the trading courses I've ever done, and all these people that sell their mechanical trading systems and all the systems and strategies they teach you in theory, I've tested all of them with that EA. I can test every strategy on the planet with that EA. None of them have any edge over you as a human being. Amazing. I'm going to do a video on it at some point, but I wanted to build it basically for my own sanity, and it's come out the back of what I've been talking to with my friend from the bank, who it's come out of testing his strategies, and we did a brainstorming session. What if? None of it's better than him because he's human. That's a lot. I'll stick to the position and then MRA EAs. Yeah, and this is why I don't have all these inputs, because if I gave you that EA now and said, go and test the RSI strategy, you'd come back in 3 years' time going, I'm exhausted. Do you know what? The one that you gave me at the beginning was best. It is, honestly. Trust me, I've tested it all. The simplicity of the PTEA is best. Yeah, exactly. That's what it's all about. I don't want to overcomplicate it. Pound CAD's coming down nicely. Wish I hadn't have exited that, but I did. Nasdaq's holding inside the opening range. We're finding resistance as well on the Dow at the all-time highs. Market, every time it gets through an all-time high, it takes a lot of energy, a lot of orders to get through to new all-time highs. So you tend to find you do get a bit of exhaustion like we did yesterday. Whether or not that turns into an accumulation and a continuation or not, we'll have to wait and see how much demand there is. But we are showing signs at the moment of potential exhaustion. Nasdaq wicks to the upside everywhere, but stuck. For the ADR strategy, trading on higher time frame, example 4 hour won't make any difference. No, because you'll get a signal too late. So if you look at ADR, we got one today on the euro yen. Yeah. So if you look at that, now we're at ADR. So a reversal alert will trigger there on the 5-minute time frame. Yeah. If you switch up to a 4 hour time frame, you're not going to get a reversal alert. Yeah. And if you're using the position trader EA and you're using the what's that? That's a 9. So if you're using the 9MA on the position trader EA, for example, yeah, you're going to get an alert, an entry roughly there at the moment, using the position trader EA. So that top one is the entry on the market reversal alerts EA. Sorry, 5-minute time frame. I was going to say it probably would be higher. So that's the reversal alert entry on the 5-minute. That's the moving average cross entry on the 5-minute. This is an ADR hit. Go up to the 4 hour time frame. Your entry on the 4 hour time frame is going to be there. But what if today the next 4 hour candle does that, the next 4 hour candle does that? Yeah, you got no entry. 5-minute you have, reversal alert you have, higher time frame, there is no entry. So you can't use ADR. ADR is an intraday strategy, the whole idea of it is you're waiting for short-term time frame reversals, that M pattern. Yeah, it's exhaustion. Think about the plane hitting the high and running out of petrol, whatever, falling back down again. Yeah, it's an ADR. It's exhaustion. So we're benefiting from the exhaustion. Yeah. So you've got to be in quick on a low time frame. If you get in on a 4-hour time frame, a sign of exhaustion would be something like a bearish engulfing, or that you've missed 4 hours of drop. It just won't work. I guess it took you a lot of time to build that EA. Yeah. But for me, it's the ultimate EA. Yeah. One of the other reasons it's well beyond the initial remit that we put together, basically. But one of the reasons I put so much into it is because people contact me all the time with strategies. And I wanted something that I could basically dump the entry criteria into and pick any exit criteria and test very quickly strategies. So somebody comes to me at the moment and goes, I've got this brilliant strategy. It's got 3 indicators on it. 2 of them are a condition indicator and 1 of them is a signal. I could quickly whiz those conditions into that and say, right, what's your entry and exit criteria? And I'll have it. So it's kind of like a challenge me, give me a strategy that you think is profitable, and I'll tell you it's not type EA as well. Or even better, give me a strategy and tell me it's profitable, and I'll test it and go, you're right. That would be even better. I just don't get them for some reason. Swiss Army knife it is, yeah. Is that the interbank algorithm? Yes, it is. That was created by Mr. Huddleston himself. That is his algorithm. 1 trade, same time every day, mechanical my arse. Yeah. I've proved it wrong. I've done that one. The one that the guy with the mechanical trading system that helps everybody pass prop. Somebody sent me the mechanical trading system. I built an EA to test it. Guess what? It doesn't work. It just doesn't work. You know, everything that you get taught in theory is tested over a short period of time. People come to me all the time with strategies and they go, hey, I've got this wicked strategy. Yeah, works on the hourly time frame. I've tested it for the last 6 months. It's like, really? Okay, let's test it for 6 years. And that 6-month period, that strategy criteria perfectly matched price action. But that was the only time that price action had occurred. And when you take that strategy and you put it over a different time period, it wipes the account out. So a lot of these, this is why you see so many courses come and go and so many gurus come and go, because they find something that works over a short period of time and they can replicate it for a short period of time, and then the market regime changes and it doesn't work anymore and they vanish, or they reinvent and come back. It's just what they do. And that's because there isn't something that is continuous apart from what we do, position trading, because we're not trying to shoehorn something into exact price movement. We're going, I hope this goes long. Crap, it didn't. We'll wait for it to go long. Crap, it didn't. We'll wait for it to go long, because we don't know when it's going long. Neither does the bank. But these guys are trying to predict the future. This is why they don't work. You can predict the future for a short period of time. Pound CAD's really coming down. Which is good because I want it to, but I just exited a short with very high risk over here and took £250 worth of profit. And that would be like 600 or 700 now. But again, if I could have known what was happening in the next hour, I wouldn't have hit the button to take the trade off, would I? I use the EMA 200 on M30, and the EA is attached on M1. Oh, right, is that your gold strategy? Uh, I've never, do you know, I have never used the 30-minute time frame. It's just one of those time frames that I've never ever looked into. And I know a lot of people do use the 30-minute time frame because it's a little bit smoother than the 15, and you haven't got to wait as long for the hour. That's about all the facts I can give you about the 30-minute time frame. It's between 15 and an hour. Yeah, it's 30 minutes. But I've never used it. So 200 MA on the 30-minute. But then again, I would say, why not use the 200 on the 15 or the 200 on the hourly? Why the 30? It seems to me if something's going to work on if you run a test, and this is part of robustness testing, if you run a test on a strategy on an hourly time frame and it works on the 4-hourly time frame and the 30-minute time frame, i.e. one time frame above and one time frame below, that is a robust strategy. If you test a strategy and it only works on one time frame and it will not replicate itself on another time frame, it's not robust. So trade no news with it. Yeah, normal market movement without news. This is the trouble with gold. Gold reacts very abnormally intraday for no reason a lot of the time, which is the problem because it's a safe haven currency. Well, no, it's not a currency, it's a safe haven instrument, commodity. But I am using advert blocker. I'm thinking to turn it off because I'm missing Greg, Nirav. Well, Peter, there are no ads on my stream anymore. I've turned them all off. You'll be pleased to hear. So you don't need ad blocker anymore. So you can have Greg, Nirav, and the mechanical guy back. I haven't seen them for ages because I've got ad blockers turned on as well. It's good. You should keep them on. The less you see of them, the better. With a basket option, maximum trades at 5 with a minimum range of 400. I don't know what that means, but is that on the market reversal alert? Right. Okay. Yeah. If you just go long only on gold, you almost can't lose. It's like the S&P. At the moment it is, but why is that? Because we've had a weak US dollar. What is gold? A US dollar cross. So if gold is going up, it's because the US dollar is weak. Gold goes down when the US dollar is strong. So it's not like the S&P because it's not manufactured to go up, the price of gold. It's a supply and demand product. S&P is stock prices which are manufactured to go up. So it doesn't quite work that way. It's a little bit more like oil in the respect of how it moves because it is a supply demand driven commodity and it is controlled and controllable by central bank and government. So the Swiss hold a lot of gold. Russian hold a lot of gold. They've got a massive stockpile of gold, and at the moment, because there's an import-export ban on Russian gold, pretty much worldwide, there is a supply constriction, which means prices will go up. But as soon as the war in Ukraine finishes and all the import-export restrictions are lifted, gold price will probably come down pretty damn quick because there will suddenly be a flood of Russian gold into the market. But at the moment, yes, it's probably the best thing to buy. But you can only say that while US dollar is weak. If the US dollar strengthens up, that will restrict gold prices. And US dollar is priced in gold. Gold is priced in the US dollar. So it is also affected by the US dollar price, which is even more complication. This is why I don't trade it. It's a very complicated commodity. And the more complicated something is, the more variables there are to make it move, the more difficult it is to predict regular price action and market structure. Whereas with FX, we know it's manipulated and it goes through buy and sell cycles because there are commercial operations buying and selling it constantly. Whereas gold doesn't work that way. Same as oil, it doesn't work that way, which is why Forex is a lot more predictable than most commodities are, and stock markets. But each to their own. Some people trade it and absolutely kill it, and it's great. If you're using my products to do it, even better. Keep doing it. You'll have to send me your set file, Champagne, because I can probably replicate it with my Swiss Army knife and do even more detailed testing on it. But obviously there's no news filter. That's the only thing I will not get involved in, news filtering, because it's a pain in the ass. Yeah, going long on gold at the moment works. At the moment is the takeaway there. Mumo, why did you turn them off? The stream is free, so watching an ad is a small inconvenience. I don't make any money from ads. They kind of go on by default, the ads, and I don't make money out. I mean, I do. I get paid by Google every month, but it's not a meal out. It's not even a meal out. It's not worth it. These people that make money, YouTubers, they've got thousands and thousands and thousands of views on every single video. I get hundreds of views on my streams, and the money that I make from it is just nothing. So I turned it off because it's just not worth the hassle. It's more annoying for people. I'd much rather not have them. It's just they came on as default. I just figured out a way to turn them off. The problem with streaming, when you set the stream up, it automatically turns a load of crap on. I found out a way to replicate my streams with everything turned off. So I've done it. It's just I couldn't be bothered to do it before. So I have now. The mechanical guy made 15 million from his strategies. I bought his book last month. He's now living in Dubai. Is he? Really? So why was he selling a course on YouTube and Facebook? I'm not being funny, right? But if you make 15 million from your trading strategies, why would you spend all of your time putting together a course and ads to advertise on Facebook to sell a course for hundreds, thousands of dollars if you are making millions from your strategies? This is the disconnect between all trading and training, which is why I don't sell courses. Yeah, because you can't. If you're making 15 million from your strategy, you don't sell it. Yeah, you don't sell it. Sell the strategy. Yeah, he sells an EA that trades the strategies, isn't he? I think. Yeah, I've replicated it. Doesn't make me 15 million. I can guarantee that. I don't know. It doesn't make sense to me personally. But anyway, I don't know. Some people, I guess, are just nice and they have time on their hands or something. I don't know. But I can't work the connection out. It's the same, you know, that saying. And it's a horrible saying. Hedged on the Nasdaq. It's going to be a hedge day today. It's going to be a loss day today. There's that saying, isn't there? Those that can do, those that can't teach. Seems to be holding up in everything I've seen in this industry anyway. I can send you the file. Yeah, send me this files, Champagne. I'll have a look at it in the market reverse alerts EA, and then I'll try and replicate it. I'll do some testing and see if there's any way to improve the edge as well. That's the other thing about that EA. It really helps when you not so much disprove a strategy, but when you try and test a strategy for an edge, you can always find an edge in a strategy, but there's always a better way of doing something. And one of the things that came out of the testing that we did with the RSI2 strategy and the other strategies that we were testing was exiting at end of day in profit is an incredibly profitable exit strategy on all trading. Yeah. So especially on position trading. So what I've discovered is, for example, this Aussie yen that I've just got out of here. So I've just taken a partial on this. If I remove those TPs now, and this closes here, I just close the trade. It's in profit. Yeah. So your goal as a trader, and this is the bit that many people forget, your goal as a trader is generating alpha, generating revenue on your balance. So generating positive income. If you take a trade and hold it for 1.5 hours and it's in profit and you close it, your job is done. If you take a trade and it doesn't work out and you add another trade average in, and the next day it makes you 0.015% profit, you close it. Its job is done. If it makes 1% profit or 0.01% profit, its job is done. What we do as traders is we hold on to our trades too long to try and get more money out of them. If you just closed out everything that got into profit, regardless of what the profit was, you find strategies have this incredible profit curve. It's not big though. It will never generate huge revenue, and it will have periods of drawdown. But overall, if you closed out all your trades when they're in profit, at the end of day, like 9 o'clock at night, for example, like that candle here. No, this is a 4-hour chart. Yeah, you close all your trades out on that candle there. Yeah. If they're in profit, just close it. It could be, let's say your average is there, right? It could be there. It could be there. If you've had a 200 ADR day, brilliant. If you haven't had a 200 ADR day, brilliant. What's your job? Profit. If it's green, shut it, take it. And that's what that EA has in it. Yeah, it's got two types of exits like that. It's got the exit at a set time every day, and it's got exit at the close of a candle on a specific time frame. Yeah, and you can set them to be God, where are the... See, this is the problem with this. You take hours to set this up because you've got to find the stuff. There you go. So time on the chart to close every day, 10:30, or a 4-hour candle. So what I'm saying is I'm going to get into a trade, and every 4 hours, if it's in profit, take the money. If at the end of the day it's in profit, take the money. Basically, take a trade. If it's in profit, take the money. That has become, from the testing that I've done, the thing that turns any profit curve, regardless of whether it does that, or anything else, into something that looks like that. Taking money. You forget your job is to make money. And you get out. I got out here. If this thing now closes like this today, at 150 or 160 ADR, that is what I should have made, not this. It's balmy. I will do a video on it at some point. Anyway, yeah, to buy us on a green screen, quite possibly. I don't know. I can't put anybody down because I don't know. You know, if he did make 15 million, brilliant. I just find the disconnect between people that say they've made 15 million and putting together something they sell for 1,000. Like, you know, the guy with the blue Porsche. Yeah, if you don't know who he is, you probably find out at some point because he'll advertise to you on Facebook. But he says he's killing it. He's bought himself a blue Porsche. He sells courses with a minimum price tag of $1,000. Do you think his trading paid for the Porsche, or the $1,000 courses paid for the Porsche? Yeah. I've had many Porsches in my time. Yeah. None of them been paid for by courses. I can guarantee that. But I can tell you, you can own a Porsche for £500 a month. Yeah. You only got to sell one course a month, and that buys you a blue Porsche. Hi, Shyam. Afternoon. I'm new in trading, want to learn how to trade. Babypips.com. Start there. Learn Forex. Go through this course. School of Pipsology, it's called. That will teach you everything you need to know about the market. And then come and do the position trading bootcamp. Forget everything you learned in that course and listen to all of this lot. 15 hours, it will change your life. But if you're new to trading, it's probably a little bit advanced. I don't know. I've never done it from scratch, so it's difficult to tell. Well, I have done it from scratch, but my course is about everything I've learned in 16 years. So it's kind of like throw away everything you've learned. This is the stuff that works type course. But it doesn't do what everybody else will teach you to do. So that's kind of why it works. If I made just 20k a month from a strategy, I would disappear quietly and trade away into the sunset. Exactly, Mumo. If I could make 20k a month from a strategy, I would do the same. I haven't got enough capital to make 20k a month. That's the trouble. I could make 20k a month very easily if I had more capital, but I haven't. Do you think you can help on Japan 225? No, I don't trade that. Nina, hello, I'm new here, bought 2 indicators. Now I'm testing and learning. Sorry for my bad English, that's okay. Testing and learning, good. Backtesting is key. If you want to backtest, depends what you've bought indicator-wise, but if you want to backtest the market reversal alerts indicator or the RSI and ADR strategy, you can download the demos of the Position Trader EA or the Market Reversal Alerts EA. Yeah, so you can go and download the demos of these. And you can use them in the strategy tester to do backtesting. You don't have to buy them, just download the free demo. And then if you want to trade with them, obviously you can buy them, but testing costs nothing. Just go and test. The Market Reversal Alerts EA. They're very similar, these two. The Position Trader EA is a little bit more versatile and less complicated, but that trades the Market Reversal Alert indicator. So test away. So hedged on both of these today. I don't think I'm going to get anywhere with them today. So NASDAQ upside target today is going to be ADR. So if we do manage to break long on the NAS, I'll be looking to get out just shy of ADR, which is the weekly high from 2 weeks ago. Sorry, 3 weeks ago. Downside, I'm going to leave it where it is, which is just shy of this propulsion gap. In fact, if it does break down, I will watch yesterday's low. In fact, I'm going to move my target to yesterday's low because we'll probably find support there. But I'd be very surprised if we get a break that far today. Market's just stuck. It's not moving today on anything. We've stalled out on the Dow at yesterday's high. But we've got a massive propulsion move, which we've got to break through to reverse. So it's going to be a tough session, really. Can't do a lot with it today. I am feeling nostalgic. Let's lose some money on binary options. Yes. Feeling. Oh, yeah. Feeling. Stupid speech to text. Yeah. Binary options. God, binary options. That was a long time ago, binary options. I used to spend a long time trading binary options. It's actually a good experience trading binary options because it taught you a very important lesson if you traded them, that it is very much like gambling and there is only a 50-50 shot, because binary options was, is it going to be above or below a price at a specific time of day? Well, it can only go up or down, so the odds are 50-50. Obviously, the payout was a lot less if you got it right than it was if you got it wrong, but that was the whole scam behind it, wasn't it? Long term, it was way worse than walking into a casino and going red or black. But yeah, binary options. It's prop basically now. So binary options has been replaced by prop. It's just a hell of a lot more of a complicated edge that you can't see that they've got. Clever. I was that close to opening a prop firm. Really was. I looked up the brokers, I looked up the white labeling systems, I looked it all up, and then I had a complete, I can't do this, this is criminal, wave come over me. And I'm glad I did, because a lot of them are actually criminals now, aren't they? And being chased away. So it was a good call. And I didn't really have the money to do it, to be honest. It cost a lot of money to get him set up. We are breaking down from the highs. I'm going to close my Dow longs. And I will re-hedge if we break high of day. But this looks to me like we're rejecting yesterday's high, which is high, all-time high. So like I said, to get through that level takes a hell of a lot of buying. So I think we may be exhausting ourselves up here. I'm going to leave the NASDAQ hedged and see if we can get a profit out of the Dow rejection. DAX is starting to drop again as well. We've also got more power coming into the Canadian dollar and the US dollar, which will drive the markets down. So pound US is weak, which means we've got a strong US dollar. Pound CAD is weak, which means we've got a strong Canadian. So can I send you the set file by mail? I kicked you from the Telegram group, did I? Why would I kick you from the Telegram group? You would have been naughty. I would only kick people that are naughty. If you've got anything commercial that you're plugging, that's probably why. You can send it by email, yeah? There's email on the website. Or Discord. You had links in your profile? Yeah, that's against the rules. So right choice to close the longs. So Dow downside. So made 50 points. So that's 100. So target to the downside, I'm not going to get greedy. I'm going to go for the Globex lows, which is here. So this is lower the Globex session. If we can break down to there, that basically pays for that small loss I've just taken on the longs and makes a profit. Won't pay for that, but at least it gets me out of one of the hedges in profit. I reckon the Dow will steamroll long now that I've closed. Quite possibly, yeah. We are sitting in the middle of a propulsion move, so there is a distinct possibility they will add here. In which case, obviously, then it's just going to re-hedge and yeah, but we'll see. We really, the thing that I like about this move here, we got a whacking great wick on that hourly candle, which is just closed. We haven't managed to break yesterday's high. Yesterday's all-time high was a rejection. Yeah, we've tested it today, and you can see today, as soon as we tested that level, immediately we ran into limit orders. Yeah, we tried to break it again. We failed. We just about managed to get through it. We collapsed. Yeah, so there is a hell of a lot of upside resistance. We've just tried again at the open using all the initial cash balance to break that level again. We couldn't. Yeah, so we know there is a big resistance to going all-time high. But that doesn't mean they're not going to be able to do it. You're always going to break all-time highs. The only reason all-time highs exist is because you break the previous all-time high. Happens all the time. However, it's hard. Yeah. Again, Kunal Desai, when I was doing his course, Bulls on Wall Street, years and years and years ago when I started stock trading, he had this saying: if you knock on the door 3 times, you fail. If you knock on the door 4 times, you'll get through. Yeah. So the resistance is only there as long as there is an order sitting there absorbing all of those orders, when that order is never going to be infinite, which is why you get all-time highs. The more times you knock on the door, the more times you get through it. But first few times you knock on the door, you very rarely will get through because there's just not enough momentum, because the whole market is seeing an all-time high that was sold from. That is a point of sell. Yeah. That is a point of sell. Yeah. So it's very hard to have the conviction to drive that level higher. But it will get through. But if it doesn't, and look at what it's taken here. We've got 1, 2, 3, 4, 5 days up. It's exhausted. It needs a rest. It will take a run up to get through there. So it's got short written all over it, but 50-50 at the end of the day. And they're buying the propulsion gap at the moment. Look, see? Maybe the right call, maybe not. Wait and see. It's got a break. So market structure is shifted short. So if it doesn't break that high and starts putting a new low in, we're going to come and test this area down here, aren't we? So this is either a market structure long or it's a market structure short. One of them is going to happen. Champagne, you're not the nefarious crypto scammer. Which one? When you target your exits from H4 extensions, what time frame do you use to search for good propulsion gaps? Hourly. So I always use hourly propulsion gaps. The 4 hourly propulsion gaps are less reliable. You find a lot more orphaned 4-hour propulsion gaps. And it takes a lot longer to get back to them, obviously, because each of these is a week. Yeah, so, you know, getting back to 4-hour propulsion gaps is almost like daily. Hourly propulsion gaps, you tend to find there's more of them, therefore there's more targets. So I'm just always looking for the closest propulsion gap that's in profit on the hourly time frame. I just find them more reliable. So I'm targeting this propulsion gap at the moment. I'm actually targeting lower than that, but my kind of theory here is if we can get down to that propulsion gap, it's one of those highs that's going to hold there, and I'm going for the furthest one. Also, it's very extended. There's a good chance we're going to get all the way down here, I think. We're waiting for some news, actually, from Bailey. There hasn't been any. As to what we're going to be doing with interest rates. So there's a good chance that he's going to announce an interest rate drop in October, which is going to weaken the pound as well. So we've got a strong Canadian dollar at the minute off the back of the CPI numbers, a lot stronger than expected. But yeah, I just always use the hourlies. But that's because I'm entering my trades on 5 and 15-minute time frames. So and I'm scaling in using 15-minute time frames. So I want to target higher, but I don't want it too high, that it takes too long to reach. See these targets here on the hourly. You got one there, you got one there, you got one there, got one there, you got one there. On the 4-hour time frame, yeah, it's in this particular case, it's virtually the same, but there's loads of them. This is a really bad example. 4-hour time frame, you'd usually find a hell of a lot less. This one is completely the opposite because of this parabolic, like week-long move that we'd had. But profit take move is starting now. So afternoon, Pontevedra, Blue Trader. It's sunny. It is also sunny in the UK. You'll be pleased to hear. I'm really, really wishing I hadn't got out of that pound CAD. That's incredibly annoying. Never mind. Right, I think we're going to leave it there today because there's not a lot happening, obviously, with FX. We're just starting to unwind positions. So banked 0.82, sitting in 1.3 DD at the moment, just waiting for stuff to play out, which it is. So hopefully tomorrow I'll be able to get out of some more of that, but there's no new opportunities at the minute. So the ADR is euro yen. I'm long on against the yen at the moment. That's the trade of the week so far. Aussie dollar CAD, which is still there, still ready to go at monthly resistance. So we've got double top on the weekly, which is blown through today. We've got a 3-bar reversal at the moment going in at the monthly high. We've got 2 hours left on this candle. So if this candle closes bearish, good chance we're going to start a reversal on that. We have got a fairly strong Aussie at the minute though. Euro CAD I'm short, pound CAD I'm short. There's no other signals, so there's nothing much else to look at today. I'm not getting into anything else, and I'm stuck in hedges. Right, so yeah, back tomorrow. We've got news all week. Obviously tomorrow is Wednesday. It's a big day tomorrow. It is it is interest rate decision from the Fed. So we are dropping 0.25%, possibly 0.5%, probably 0.25% tomorrow. So that's happening tomorrow evening. So tomorrow in the day, you're going to find rotation. Market's going to be very reluctant to put any US dollar moves in ahead of FOMC because it needs to know what the overnight rate is going to be for the positions it's going to get into. So very unlikely we're going to get any movement tomorrow. 8 o'clock to 8:15 is when we probably get the move starting tomorrow evening. So GDP overnight, we've got CPI tomorrow morning, which is an annual figure for the pound. That's forecast to be as expected. If that comes down to 2.1, pound will drop tomorrow. Potential movement on the pound tomorrow. So if you've got any exposure on the pound, I've got one short on at the moment on that pound CAD. Just obviously bear in mind, if this is sitting here by end of day today, I'm closing it because tomorrow this thing could go that way or that way. Bear that in mind, obviously, if you've got any pound exposure on. But yeah, we've got that tomorrow morning at 7 o'clock. I'm on at 8 o'clock tomorrow morning. And then obviously we'll have a look ahead at FOMC, but tomorrow's likely to be rotational in the day because they're not going to want to put too much movement in. So big day tomorrow. And then we've got the pound rate on Thursday. So Bailey hopefully will give us some indication as to what the hell we're doing with this. We are still at 5%. We've hit inflation target. We've bounced out of inflation target, and they've given us a tiny 0.25% drop. So we are, for some reason, scared to drop interest rates. But when we get some inkling that that's going to happen, we're going to get some weakness in that pound. So again, another reason to keep a short on. This could easily be back down here next week, but Bailey is not really giving us any indication, is he? So nice profit take starting though on that one. Speaking of hedges, I'm trying out hedging Nasdaq with the micro Nasdaq to get around FIFO. Haven't been busted yet. Yeah, it depends if you're doing it on prop or not, but it's not a very difficult footprint to detect, Brian, is it? So if someone looks at your trade P&L and finds out you only go long on the Nasdaq and you only go short on the micro Nasdaq, I think they might have an issue with it. So it's tricky. Somebody we're talking about briefly before I go because I'm waffling again, but we talked about this a few times, the fact that the Nasdaq and the S&P are correlated most of the time. So some people do trade those two instruments in opposite directions. This does a lot more movement though, that's the trouble. So when the Nasdaq takes off, it tends to take off a lot faster than this, so your hedge grows if you're wrong on the NAS. If you're right on the NAS, your profit grows exponentially faster. So you can use those two to get over FIFO, but you need to make sure that you trade them in different directions so that you're not just long one and short the other all the time, because they will pick that up. So if you're constantly changing directions and only trading those two instruments, but in inverse, there's still a footprint, but that is an option. Just got to be careful with it. Prop firms especially, they will pick any reason not to pay you. That will be one of them. So hard. Anyway, right. So yeah, I'll be back tomorrow morning. Yeah, I'll be back tomorrow morning, and obviously we'll trade the Nasdaq. We'll trade the DAX and the FTSE tomorrow morning, and see how we get on with those. And yeah, we'll basically see what happens tomorrow. But I don't expect a lot of movement because obviously it's FOMC day. So it'll be a case of hopefully getting some guidance on that dollar tomorrow. All right. Have a good one. Anything you need, let me know. Otherwise, I will be back tomorrow morning. Otherwise, I'm in Telegram or Discord. I'll see you next time.